Good afternoon, gentlemen. I hope you're well, and I hope you're not too badly wrecked. But this should be a lesson to us all that we must prepare for crashes and we must prepare very well. I'm going to show you some examples of how you can actually hedge yourself against market crashes, downturns, and still be in profit and still protect your money. So, what I want you to do is get in the habit of if you make $10 profit, I want you to put $2 away, $3 away into a wallet, and I want you to provide liquidity all the way down for the crash. This is going to write your own paycheck eventually, and it's going to provide you an income source, and it will help you stack major assets like Bitcoin, Solana. So I'm going to show you what I do, and I'm going to show you exactly how it works and how easy it is to actually implement. So for example, I've got a position here of $750, roughly speaking, of mainly dollars. I only put dollars at 125, basically. I put only dollars in, and I'm going to show you how to do it. Now, what's happening is my dollars are swapping to Bitcoin. So as it falls, it's DCAing in at all price points down to 30K, which I think is where kind of Bitcoin will go bottom if it does, all the way down. So I'm going to leave this. Now, the benefit is I earn Bitcoin and dollars, which I throw back in. So I set this up a few months back and it's already in profit basically. So this is free money, free Bitcoin, whatever. And I'll just keep adding to it till it grows. The yield is very small, 30 cents. But instead of holding dollars in my wallet, I'll rather hold it and earn some Bitcoin. That's money that I've just put away like so. So we're going to show you an example and we're going to show you exactly how it works. So let's say, for example, you've made $50 and you want to put $20 away. Now, the benefit is you can just keep adding to the pool as it goes and grow it till you're happy. You can say, okay, I just want to earn $5 a day. You might need to put in, let's say, $3,000, $4,000, and you'll earn a couple of dollars a day, even in the bear market. You'll get to the stage where it will start to add up over time. It's up to you, your money, how you want to play it. So, what you do is we're doing all the way down to, let's say, $20,000. And what we're doing is we're just putting up dollars. We're not putting anything else. So, you'd put in, let's say, $25 to start with. And that's your position now. So we can just zoom out here all the way down to 20K. We're going to be providing dollars as liquidity. So if you, for example, just for math's sake, we put $100, each $1,000 it falls, roughly speaking, it would fall 1%. So $1 will turn into one Bitcoin. But as the price goes down, the beauty of it is you earn a lot more Bitcoin here because Bitcoin is 70% off. So it will be buying and trading at those levels. So what we're hoping for is to protect our dollars all the way down. We'll have about, if it goes to like here, we'll have $100, $90 around here in Bitcoin, but it will be a large amount of Bitcoin. It will be like buying Bitcoin at this price. So it's an automatic DCA out of the market. Now, you shouldn't put your whole life savings into this simply because the price may go up. So this is just something you need to add on the side and just have as a DCA strategy. So trust me, I sold weeks ago, months ago, most of my bags. I've been selling the whole year in and out, but I'm not in a position where I don't mind if the market crashes because my pools get triggered that I've set up. I've got some below 100K. I've got a BNB one that's now live under $1,000. So this is what you can kind of do, and you can get smart with it. You're probably smarter than me in terms of pricing. You might say, okay, I'm gonna set it up. So when Bitcoin hits $80,000, I know we're really into a bear market. And I think I'm just going to leave my dollars here, which you can do, instead of leave it in your wallet and it can fall. Now, be aware that this is a protocol called Orca. You can use Meteora, you can use Uniswap, you can use any other platform you like that lets you yield farm or provide liquidity. Yeah, it's up to you. I'm not recommending Orca. I personally love it, but be aware that these protocols could go under if you're using a high risk one. Orca will probably be around, but totally up to you. So you can do that. And you can say, okay, when it triggers, I'm willing to provide liquidity. You will earn more fees the smaller your range. But you can even do to $1. It doesn't matter. You can say, okay, I want it all the way down to $1. That way, even when it hits 20K, you'll still be heavy in USDC. What will happen is your value of your portfolio or whatever you drop in won't really drop too much because it's such a wide range. So you'll hold the majority in dollars most of the time. And when it sort of bounces back down, what you want in theory is it to bounce here, earn Bitcoin cheap, and then shoot up with your Bitcoin bag. That's kind of what you want. So when you pump back up and the market sort of takes an uptick, you'll be in a position where you're like, okay, I got a bunch of Bitcoin and it's gone up in value and I'm back at my dollar range. That's the ideal situation. So it's very important. You must use coins or do this strategy for coins that are going to last. You do not want to do it on a meme coin that's going to be dead. You can potentially do it on those multi-cycle ones, but even then, I think it's a bit risky. Who knows what's going to happen in a year or two, or even 6 months? It may be the case that the price may just kind of just tick down a little bit. It may just go to here, bounce up, and you've got some free Bitcoin and $3. But don't think, oh, I haven't got $1,000 or $2,000 or like me, $750 to put away. No, just slowly start off with $5. Yeah, you need something for the bear market. I'm in a position where I've got loads of these pools all over the place where I'm like, okay, even if the market dies and crashes, I'm in a position where, okay, I've put away some dollars. I could have sold them and took them out, but I'm in a position where I'm like, okay, I'm getting X amount of dollars per day for free. No matter what I do, I just buy it, forget it, and that's it. And I'll just hopefully be in a position later on where I'm earning hundreds of dollars per day. And in the future, I'll come out of the bear market really, really strong. So get in the habit of doing something like this. Obviously, pay attention to the estimated yield. It can drop. So I can say, okay, if I put in $1,500, I'm going to get 60 cents per day. If I put in um, $3,000, I'm likely to get about $1.20, $1.80 on the weekend per day. And to me, passive income, earning $1 passive income is way better than earning $10 active income. I'd rather have loads of these pools going, ready for the crash, ready for the bear market. I would have just held these in dollars anyway. So I hope you take my advice. I genuinely, for your sake, I hope you take my advice and you just put away even small amounts, even if you're earning 10 cents a day, I'll be very happy if you do it. I wish you guys all the best. I love you all and take care.